And here we are, this October 1st, for our 9 a.m. class. This is a class where we assess what the market did the first hour. You know, folks, if you guys think that trading until 11, 12, 1 o'clock is the thing to do, I definitely discourage that. Your whole thing should be for you to be in a place that you can get in a market, and you want to be out of there by 10:30 maximum. You want to be out of there. Now, if for some reason you were not able to be in a market in the morning and you come back, well, from 11 and 11:30 you may be okay, and it doesn't mean you cannot make money at lunchtime and other hours, but it's more of a it's more of a torture to your brain than it is a blessing. Again, depending how the activity in the market. So you should train. This is the whole thing. You are training yourself to be able to look at the market in the morning and be done with it. Be done with it um, ASAP. But that doesn't mean that you are approaching the market with the urgency to be done. Do you guys understand the difference? Do you understand what I'm saying here? For example, this was the trade I did this morning, right here. This is the trade I did this morning. So this is where the market opened. I let the market do this, and then I took my trade from here to here. I did this on video, and it's exciting because I first of all I was thinking short. Was thinking to the short, and I'm going to explain this. Even though I could see a potential wave 5 up here, um, and because we had wave 3, I could see potential wave 5, and we were so uh, um, in top of the traveler here. But then on a video, I said, well, we're going to go up. I say why, and then I said, this is the bar. This is it right here. This is it. Boom, and I click and look at this. Bingo. And I did this with 12 contracts, ended up with like $1,200. And this is one of the videos, for example, we will use for promotion. Isn't that what you want? Isn't that what you want? Be able to, the market opens 10, 15 minutes later, you're in, you're out, and it's done. And it's done. It's done. But here's the thing, to get that, you got to train for it. But if you're training at lunchtime and you're training at 1 o'clock and you're trying to do trades at 11 o'clock, you are all over the place. You're not training to be in a market and to wait and wait and wait. I waited for that trade. That trade was bouncing back and forth. I waited for that trade. And then when it finally did it, I said, this is it. And I clicked and the thing just takes off like it was listening to me. Okay. The only reason a person is stopped out is because they get in too soon, or they get in too late and the thing pulls back. So
Yeah.
it depends where you got stopped out. But right now, let me go through. And then here's the other thing: you got stopped out. Somebody else may got stopped out. Whatever happened, those trades, those trades are being videotaped, and we're giving an assessment as to what happened. Giving an assessment as to what happened. So those videos will be on the website here pretty soon, where you guys can go back and hear one of the coaches assessing the market for that day by looking at your charts. Um, okay, so now what I wanted to say when we began this was this: look, you come over here at 9 in the morning, and what you want to do, you don't come over here to see if you were right or if you were wrong. You come over here like a sponge. You open up. You don't say great. You don't say bad. You just let it be. And just notice the analysis. What was about the analysis that we are given here that you could see how it could benefit you? See? I mean, my goodness, I have had students say, "Oh, I know you took that trade, but I would never take that trade." Okay? So, why? Why? If the trade worked and it was done right, why wouldn't you take the trade? What about being open-minded that you can see? For me, is this way. For example, I watch a trade, and let's say Jason took a short up here, and normally I wouldn't take a short here. I would not take a short where the eagle is above the hawk this far from the hawk. But let's say Jason took this trade and he took it all the way down to here. I have a choice. I can say, I will never do that. But let's also understand something. Who took the trade? And is that person consistent? All right. Just because somebody takes a trade from here to here and makes money, and then you don't hear the person take trades for the next 3 days, you don't want to invest time here trying to figure out how you could have taken this trade. Does that make sense? Does that make sense? So in other words, is you see in a trade that was profitable, but with all due respect to all the members, is that a member that is consistent with its success? Is that member consistent with its being successfully taking profitable trades? Then, if I look at someone who is consistent with their trades, and it's a trade, for example, I never took that trade. I wouldn't take that trade before. I'm not going to say I wouldn't have taken that trade. What I'm going to say is, wow, I noticed Jason takes these trades. It's so much separation, but this he's got to be seeing something that gives him the confidence to take the trade and the confidence to hold until the target that he placed. That's what I'm going to say. And then I got a choice to make. I'm going to say to myself, I want to learn how to do that trade. And if I decided I want to learn how to do the trade, I'm going to open up the charts where, for example, Jason took the trade. I am going to open up all the charts and I'm going to go through step by step, starting on the anchor chart. Then I'm going to go to the 32. Then I'm going to go to the 8. And I'm going to see what I can discover that would tell me that's the bar or that's the bar. Is everybody with me? Are you following? When you do that, guys, your whole trading, everything just changes. Everything changes. Now, each and every one of us have a particular trade that we recognize faster than the others. But let's not forget, it did go from here to here, from here to here, here to here, back up there. The market is always moving, isn't it? So we only wait, like I only wait for certain situations before I take action. But that doesn't mean that if I want to devote more time, that I cannot figure out why this would not be the place to short, or even there. You see, the moment you judge, oh, I wouldn't do that. Oh, it's not good enough. Oh, look, if the person is, um, I'm looking at something else. if the person is successful with their trades, then and but first of all, make sure that you already know what you're doing. Make sure that you are already profitable. Stick with the very basic, please. Now you're sticking to a particular trade, and sometimes you don't see that trade set up for 2 hours. Sometimes you don't see it set up for 2 days. Well, in the meantime, the market is moving. Who else is out there doing trades that I should be paying attention to and develop add another trade combination to my recipe? Is everything I'm sharing with you here, is everything I'm sharing with you making sense? And here's the members. We have 73 of you here in this room today. Beautiful. All right. So here is Thursday. And what about Thursday? Thursday is a day that the market tends to go sideways, more sideways, slower. Sometimes the swings are big, but are very much like this idea here. And wake up in the morning, Thursday, sideways. Now, I did not uh, have my charts open into the end of the day, so I did not realize what the market did at the end of the day. So I'm just thinking it's Thursday, market tends to go sideways, and then by the time I open my charts and look at the market, I want to notice a couple things. So I go back to my Falcon 3, Falcon 4, and I'm going to notice, pretty nice. Dual bar reversal. Pretty nice dual bar reversal there. The market as it breaks a place. So in other words, as the market broke the traveler here, it recognized it. As the market broke the traveler, right here slowed down, it recognized it. Even here, it's recognizing the eagle. Look at that. It's recognizing the eagle. You guys see that? Compared to just running down, running up, running off. So today, I am seeing that the market is recognizing the eagle and it's recognizing the traveler. Look at the way the market is recognizing the traveler on the 3. Well, that is good. Okay. Um, and then from here, I go look at my, right here, I'm going to look at my anchor chart. Now I'm going to open my anchor chart because I got a 3. I got a 3. I know it's not extended. Is this here? I know it's not extended. Is this here a wave 5? It doesn't really look like a wave 5. It is flat. It is flat. So I dropped a Fibonacci. And wave 4 normally comes from a 38. And I talk about this in a video where I say, wow, we came very close. We broke the buffer. We broke the buffer between the 23 and the 38. We broke the buffer. So if we broke the buffer, the odds are good we're going to come to this 38. Okay? I want to see this it broke the buffer. After breaking the buffer, it didn't come to the 38. It didn't come to the 38. This thing can come to the 38. And but I'm still looking at this flat hawk here. Next thing is consider the nearest deep. So considering the nearest deep, so that's the opening there. Make sure I got this thing right. Okay, consider the nearest deep. Well, over here, that's a deep from there. Coming through here, this would be this is a significant, so that's a deep. And then I look over here, and I'm right on top of the traveler. Okay. I am looking at the Fibonacci buffers, not the wave 3. Okay. I'm looking, I am looking at the buffers right here. The buffers is the full push. You can get buffers also from okay. I can go like this. I can go like this, and I got a 38. I got a good 38 here. But I was looking at the time. I am looking at the buffers. At the buffers. I'm actually even considering this to be a wave 5 somehow with frame rate at 5, even though it's not completely up here. I'm looking at the possibilities. So this chart here at this point is telling me short. This chart here is telling me into the traveler. Here you got a wick off the eagle. And I am thinking at this point, actually, I am thinking we could actually run down first, take off. And, but before the takeoff, I wanted to see this thing because if the market opens, so let's understand this, the market opens. And if the market's intention is to run down, the tendency is to push up first. Yes? And if the market's intention is to go up, it tends to run down first and then go back up. So I'm actually looking forward to the market to pop up to a degree before it dropped down. But things changed. Things changed. Now I start doing a video for this thing right at the open. Right at the open. And so here's the open. Do also remember, even though you got a wick down here, that this eagle is very lazy. See that? You see how this eagle is merging with a traveler there? This eagle is lazy. So I got a potential of a pop because of a deep here. I got a potential of the pop because the traveler, the eagle is way above the traveler. I got a potential of a pop because also, if this is to be the 5 up here. And by the way, the eagle does not have to be above the hawk to be a 5. Does not have to be above the hawk to be a 5. So here's the open. It's popping. So my question now, here's the pop, and then I'm thinking, is it going to come to here? And so what I did, and you'll see it on the video, is I said we should come about into here and then reverse to the downside. That's what I was expecting. I got that on video, guys. And I like, so the belly of this bar. So if you look at the wick up, the wick down, and you look at the red thing, the belly is a deep. Can you guys see that without using a Fibonacci? Look, if I take this from here to here, there's a deep right there, the belly. So the wick and the beginning of the bar. So sometimes I put my line right there and I'm saying, okay, this is where this thing can drop. But I want to bring these charts all up here, line them all up. Now that looks very nice right there. Would you agree? You agree this 8 right here looks very nice? So, this looks like a nice 1-2 here. And we already broke the eagle. Is this thing going to push up to the hawk? And that's where I put the other red line. Is this thing going to, because wave 5 still not complete. Okay? Wave 5 still not complete. So, pushes back down, pushes back up, pushes back down. But now, to understand this, we need to go back into the, we need to go back in here. Let me get, so let's go back here. Again, look at the wicks off. How am I going to show you guys this like this? The video is the ideal thing to see the whole picture. So this is 3. Comes back. But now, how am I going to do this? Because this was interesting, guys. Let's look at the 3 and the 4. All right. Is everybody seeing this okay? I'm moving these charts around. I don't want to confuse you. Is this okay? Now, you see how nice this wick goes off here. Wick takes off. Wick takes off. But I don't touch it. I'm trying to recall exactly all the things I was saying. I did not touch it. And I'm trying at this moment to recall. I didn't touch any of this. Okay, so several reasons. Several reasons I didn't touch any of this. First, for me to take the trade here, this wick up bar right here came pretty close to the beginning here, which means this thing can go for an A, B, and down to a C, because this wick up bar pretty much lines up with that. That's the tendency. And even that, if I look over here, this eagle is too far off of this hawk. I stay out of it because I'm still thinking in ABC. Through here, it doesn't go lower. And then it pushes off over here, and that bar is too deep on the eagle. And this eagle right here can get stuck to the traveler, sucking the price back down. This eagle here can get stuck to the traveler, and the price goes up and it comes right back down. That's a very common behavior. Then I get over here and through here. What am I going to do? I'm not going to take a long here. I don't care how good it looks on the 8. I don't care how good the eagle looks on the 8. Okay. Then I go through all this. And then here again, eagle is below the hawk. Eagle is above. Eagle is below. This causes pops and drops. Because if the eagle is above the hawk on the 4, it causes the market to pop up. But at the same time, when it pops up, if the eagle is below the hawk on the 3, it drops. That's a common behavior. Or vice versa. If the eagle is above the hawk on a 3, if the eagle's above the hawk on a 3 but below the hawk on a 4, it pops and it drops. The eagle above on one chart and the next chart, the eagle below, it causes the market to go sideways. And so then I'm looking at the eagle falling behind here. Okay, so the eagle is merging here, which means I could have another pop, which means this eagle's still above the hawk here. I could still have a pop now. The eagle here on my 3 is merged with a hawk and a traveler. So the push down very shortly could cause the pop. But then the pop, I'm not interested in a pop because now my eagle is below the hawk on my 4. Nothing lined up. Do you guys understand that? Nothing has lined up. But the moment you say, I'll take the trade, it's going to work out because it's going to go up. It's the moment you are not working the technicals correct. You're just doing it based on a feeling. Does everybody really understand what I mean? Nothing is lined up here. I've only gotten a few yeses. Okay. Here, bars inside of the eagle, eagle below the hawk. Here, the eagle is open to the upside. Here, I'm pushing off. I'm pushing off the eagle on a 4, and the eagle on a 3 is above the hawk, which so the eagle on a 3 is above the eagle on a 4. Can you guys see that? And I click. Took my trade right there. Now, here's the thing. On a video, I'm talking through this and I'm saying this is the bar. I was waiting here to click and I'm saying this is the bar, this is the bar. I take the trade and the thing just takes off. And that was the hawk on the 8. That was the target. Boom. I had fun with this trade because it was just like I was so involved with it that I knew that I was saying on the video, this is the bar, and I click and the thing does this. Ah, what a feeling. What an amazing feeling. Now let's go back here. Um, Look at that. I waited and waited, and this was a good wick, but that one came down. That one came down, broke it. I waited, and then as this buy is also finishing here, click, hits, goes up a little bit more, and all the way back down. Look at that. Look at that. See it? Now, I was thinking short. Things didn't pan out for the short. I see things starting to change through here, and I start considering going up to the hawk. Was this a good entry? And I mean, was this an entry that paid off? And then was the target correct? Was the target correct for this thing? Yes? No? All right, so now let's see if I was right. Let's see if I was right about putting the Fibonacci's like this. Let's see if I was right about putting the Fibonacci's like this. So on a video I say that 38, it broke the buffer. I was questioning if that was a 5. Well, that was the 5 right there. But that doesn't change. It didn't go higher high, so that doesn't change where the Fibonacci's are. When you come close to the 38 or any fib and you bounce back up, when you really normally come through, and of course, did you come through correctly here? Is there a difference between this wick and this wick, guys? Is there a difference? Is there a difference? Could you justify why this thing didn't come to the 38 here, but it came to the 38 here? Can you see the difference between the two? What's the difference? The difference here is that this pushed back up. When he broke the eagle, it popped the balloon. It evaporated the pressure. Plus, the hawk still flat and still teal, right? Aqua color, I mean. So, compared to this side here, the hawk is rolling down already. It's red. And the eagle, of course, is magenta with the wick off the edge. Boom. Can you guys see the difference? You see, when you are doing historicals, you want to have a definite scientific answer that you can use over and over and over, that you use over and over and over to know the difference. You got to know the difference. For example, is there a difference between this scenario here, why it didn't go to the 38, versus this one? Of course there is. I never pushed off the eagle. The eagle is above the hawk still. No wonder it didn't come to the 38. So if it didn't come to the 38, I wouldn't be upset. First of all, he's supposed to come to the 23, not the 38. On a class the other night, I was teaching you guys that if you break the buffers, when this thing is ready to roll down, it's going to come through the 38 with momentum. And I also said, and the odds are you're going to break the buff on a 50 or go to the 50. Look at this. Now, when it came to the 50, that wasn't good enough. To be a good Fibonacci retracement, you have to go about 25% into this, 25% from here. It didn't do it, which means it's not finished. Pushes up, bang, right through the 50 into the 61. Now that's a good 61 retrace there. Is it going to stop here? This eagle's still too far below that hawk. Double bottom with the missing of a tick. And here's where you find out that no, it's not going to go lower. It did not break the buffer. It was perfect. You guys see the difference here? This is how you study charts. You notice the detail. You notice the detail. There's a huge difference. There's a huge difference. For example, um, this pullback here, didn't even go deeper than this. It went right back up. Why? Why did this pull here did not go deeper than this? If we got an ABC for an ABC, why did we not go lower here? Well, the hawk's still rolling up. You see the difference? The hawk's still rolling up. How about this one here? When this came down, it didn't even go lower than this. Here. Missed it by a tick. Why? Well, the hawk's still rolling up. The hawk was rolling up when this came down. Can you guys see that? Where over here now, over here, even this one here did not go lower than this. Do you notice that? This is higher than this. This one is higher than this. This one is higher than this just by a tick. But it's not until here that everything just takes off to the downside because the eagle is coming down and the hawk is coming down. And that's the same story in every chart. That's the way it behaves. Well, I hope you guys got a lot out of this. I know you did. But I want you to know. I want you to know. Uh, you don't learn this. You don't learn this watching a live market. See, I learned this when the market is not moving. I'm not distracted. One. Two, I come back here and I am going to notice every little piece that is presented to me. I want to know. I want to know why this thing went from here to there. I really do. I want to know why this thing pulled back here and then pulled back again. I want to understand why you did that. But then, if I didn't take a trade there, could I take a trade here? I don't want to say yes because I see the thing run. I want to say yes because I understand why. For example, here, smart money kept going up. And this is a dual bar reverse to break the stop. Well, I broke the stop, but why do I get another wake up bar, another wake up bar? Because you broke the top, the price goes up here, comes back, pushes over. Again, checks one more time. You see? Now, why do I got to wake up out here? I got to wake up out here because this thing wants to break through this here, even though it's just for a few ticks. I want to understand. I want to see, for example, why the dual bar reverse here? Because this thing ran down and it stopped here. Why did it stop here? Because this is a place where the market stopped, give it some thought, and then went higher. So when it comes back in here, it stops here to make sure, almost like asking permission, should we go down? But when it went down, it stopped where? It stopped within this boundary. It stopped within, for example, this bar right here. Do you notice that? Are you aware of this? Because if you come into the market and the first thing is you're trying to see how to take a trade. Okay, the eagle is below, the eagle is above, the blah, blah, blah. Man, you're not learning nothing. You taking trades by chance. That's why you do 1, 2 trades that works and you do 5, 10 that does not. That's not the way to do it. This is the way to do it. Now, what I'm doing today here is, well, why don't I explain what happened through here? What for? Does not the market move pretty much the same way all the time? If you understand this, and if you understand what I'm talking about here, then you will understand this. I don't have to explain all this. And then the other thing is, do you want to learn how to be in the market and out of the market within the first 30 minutes, hour? If that's what you want, then you focus on the first 30 minutes, hour. But if you're going to invest a lot of time on the rest of the day because you want to understand, well, then your mind is not going to get ready to take the trade in the first 30 minutes. Your mind is going to keep thinking about the rest of the day. Isn't everything that we experience based on what we learn? Yes or no? Beautiful. Um, yesterday, yesterday I asked for you guys to send an email in and let us know how you like these classes. We've got quite a few. but we didn't get no 75. So am I to assume that 10 people really like it and the other 50, 60 don't like it? Or what am I supposed to think here? Come on, guys. Take the time. Take the time to share your enthusiasm. Okay? Send the email. And with that said, enjoy your class this evening. Thank you.